entry points are going to be based on step 2. And now step 3 is our exit strategy. And our exit strategy, we go for a fixed profit objective. So we've got 2 potential trades starting to develop here. We've got a potential long setup over here on our dollar-yen. We just now need to wait to see if we can get what we call directional confirmation. And we also have a potential setup over here on our dollar versus Swiss franc, and potential short developing over here on our euro versus dollar. And that's one of the benefits of learning a rule-based trading application, is we can sit back and we can go through and we can plan our trade. In fact, we work off of what's called a trader's worksheet. This is a worksheet that we go through prior to each trading session, and we can simply map out where we need price to be, what strategies are going to come into play based on where price is, and then now we can sit back and we can wait for our entry strategy to develop and meet our criteria. And then finally, and we'll go into a little more detail on this, and then finally step 3 is our exit strategy, where we take profit. And so here at the Trading Institute, one of the things we teach is we teach what's called a scalping technique. Now, by pure definition, a scalping technique is specifically someone who is going into the market and trading 30 to 50 times a day, trying to find 1 or 2 pips out of each transaction. And the reality is you can't do that in this marketplace. Your Forex broker would close you down. We use the term scalping because what we want to do is we want to scalp out the highest probability piece of each price movement. Because once again, we know it's far easier for us to be able to effectively grow our profit by spending a minimal of time in the marketplace. And so when we look at, for instance, even today here, if we look at, this is the beginning of the day here, and so the reason why I bring this up is this is back to the euro versus the dollar again, is a lot of times I see these software-based and system-based trading programs that they say that if you had traded our program, we would have netted out 300 pips in the marketplace trading in our program for the day. And the reality is the majority of time is I think a lot of this information is a little bit inflated, if you will. If we look at the euro right now, the euro for the day here has traded from 38.05 to 38.45. It's a little bit quiet right now, an entire 40 pip move. So the most you could have yielded out of the euro at this point in time is 40 pips, because that's the extent of the amount of move that it's done for the entire day. But these programs consistently will say, we made 300 pips today in the marketplace trading on one lot, and we'll talk about that. And oftentimes it hasn't happened. And that's why it's so important when you use a rule-based trading application. We have a rule of thumb that says you can always trade, you can always use sideways trading strategies in any market condition and make profit, but you can't make trending strategies in sideways conditions and consistently make profit. And the point being is that your Fibonacci values, your exponential moving averages, your stochastics, your MACDs, what have you, would not have assisted you in any way, shape, or form in this in today's market conditions, because it is clearly range bound. I'm just checking in. We still potentially have our dollar franc trade set up here, so we'll keep an eye on that as we move forward here. We're looking for now what we call directional confirmation, and we'll go into a little more detail in that as we move forward here and see how things start to develop here. We need to, one of our rules is we just need to wait a couple of more minutes, see how price starts to develop, and we'll see how things work out. So we need to see if we get that directional confirmation. So we'll check back in on that. And remember, we're just going to go into an overview of the trading process now. Then we'll come back to current market and evaluate and see how things are going. We also still potentially have our long setup on the yen and the euro as well. I'm just waiting for your screens to catch up. What you see on your screen now is a sheet of music. Now I bring up this sheet of music because I said that learning how to trade is just like learning any other discipline. I'm amazed at individuals who pursue getting involved in trading, how in all other aspects of their lives they follow typically a standard path to become successful. They go out and they decide that they're going to pursue a particular avocation. Maybe they want to learn how to play a musical instrument, pursue an athletic endeavor. So the first thing they do is they go out and they get the correct training and understanding, and then what they do is they realize that they need to practice that information in a repetitive fashion in order for their acumen to develop. And so when an individual first looks at a sheet of music who hasn't been correctly trained, the sheet of music can look like in essence almost a sense of random marks that mean absolutely nothing, and it's very hard for an individual to interpret. Where for a musician who's been correctly trained how to understand the sheet of music, after they've practiced it repeatedly for a period of time, they can literally hear the music play in their heads. But in order for them to be able to do that was first they needed to get the correct understanding of how to interpret that sheet of music, and more importantly what they had to do is they had to go through a practice phase in order to be able to start to develop their acumen. Because we all learn in the same process. We all learn in the same way. The first thing we need to do is we develop what we call visual cues. And we need to repeatedly see these visual cues over a period of time, because then as we repeatedly see these visual cues, they no longer seem random to us, and we're able to start to identify patterns out of them. And then once we can start to identify patterns from them, then all of a sudden we can start to create action. In our case, when we read this sheet of music and we see these black marks on this piece of paper, there may appear somewhat of a sense of order, but to the untrained eye, it seems very random and very much like looking at hieroglyphics. To the trained eye, it's a very very organized, structured process that makes sense of everything that you need to do to be able to effectively interpret this sheet of music. But once again, it comes through developing and conditioning your brain to understand these visual cues. Once you see these visual cues, then you can start to act. And then in the case of the musician can play the instrument now because each one of these notes represents a visual cue. For the trader, looking at price, each one of these candlesticks and the patterns that start to develop are also visual cues. And so after a period of time, through practice and repetition, this price structure no longer has a sense of randomness to it, and now has a sense of order, and we can anticipate and plan the process using price as our primary indicator. And we can look at these, and now all of a sudden, over a period of time, it no longer seems random, and these patterns that start to develop start to act as visual cues, and now we can create an action off of it. In athleticism, they call it muscle memory. For us as traders, it's neural memory that we create so that when we see a price visual cue, now we can react or sit on the sidelines. And that's the benefit of, one, using price as a primary indicator. Two, using a rule-based trading application. Because remember, we want to use the correct tool for the correct job. And so we still have our potential long setup here. And so the visual cue was based on key number, based on strategy number 7. Also based on strategy number 1. And now our entry strategy, there's a potential, I had a visual cue that there's a potential for the trade. Now finally what needs to happen is we need to get what we call directional confirmation and the final visual cue, which then confirms the potential entry point. And so that's how we evaluate the process. And so for the trader, it becomes easier to understand this because now all of a sudden this price chart is no different than the sheet of music to the musician. The key is that we learn through the correct training, but we also learn via repetition. And that's important because oftentimes traders are under this panacea that what happens is that we can simply sit down, see the information one time. Let me check in here too. It looks like we've potentially got a short setup also here on our dollar versus pound here.